Welcome to Boston Real Estate Times. Our guest today is Matt Gralla. He is a vice president at Cain International, which invests in commercial real estate in the United States and Europe. Since 2014, Cain International has invested about $7 billion, both in debt and equity. We are going to talk to Matt about how the commercial real estate market is doing in the US, and especially going to focus a little bit on all the hype we have about life sciences facilities. So Matt, welcome to our show and really appreciate your time.
Thank you. Thanks for having me.
Okay, so you have some investments in Boston as well, your company has invested. So let's talk about a couple of your Boston projects here.
Yeah, so we have one project there that we invested in a little over a year ago, July 2019. We are invested in the development of the Raffles Boston Residences and Hotel. It'll be built across the street from the John Hancock Tower, which I'm sure everyone's familiar with. It's the tallest building in Boston. So we will be delivering 146 residential units and 147 hotel units. And it will be branded a Raffles Hotel and Residences. And for those who aren't as familiar with the Raffles brand, it's a ultra luxury brand that's really prominent in Asia and Europe. Many people may know that their flagship in Singapore. This will be the first Raffles in the United States. So we're very excited about that, and we think we're delivering a very exciting asset in a market where there isn't a ton of real true 5-star luxury product in the market, both the residential and hotel side. So we're very excited for it. It's being delivered in a couple of years in 2022. Looking forward to delivering a great product to the market in 2 years from now.
Yeah. So now Cain International invests in all types of commercial properties, office, residences, and all those things.
Yeah.
So let us talk a little bit about, what is your take about overall Boston commercial investment market today in the light of this current pandemic?
Yeah, look, I think Boston as a major city in the United States, I think it's facing a lot of the hurdles and issues that a lot of the other major cities like New York, Los Angeles, San Francisco, Miami are facing right now. I think office is definitely challenging right now. Just from the work from home kind of trend based on the pandemic. I think a metric was released last week or a week before, about 10%, only 10% of people are back in the offices to date, and it's a troubling trend going forward. But I think eventually, like I think will happen in New York and LA, I think people will want to come back to offices, and they will come back to offices. But right now, it's a very tough asset class. I think also because of the trend, because of the pandemic, with people just moving out of cities, you're seeing the same thing in Boston, especially, with Boston having so many great suburbs to go to and second vacation home areas to go to. I think people are downsizing the city or just removing themselves from the city completely and moving out of the city into the suburbs. And lastly, retail and hospitality are obviously also struggling just because, retail had already been trending in the wrong direction. And then with less foot traffic and people in the city, just less demand and less people on the streets to go to those stores. And hospitality, people just aren't traveling as much, and there's less flying around, there's less business travel, there's less leisure travel. People are just a bit nervous about being in a space with other people, or being in rooms where people have used previously because of the pandemic. So there's definitely troubling areas, but that's right now, and I think that will change obviously over the next couple of years.
So how devastating this pandemic has been, if you look from the totally investment point of view, and in terms of return for the investors, as far as the hospitality sector is concerned?
Yeah, I mean, it depends. I think a lot of it depends on where you are in the life cycle. Obviously, if you have an operating hotel, or if you had an operating hotel that you've owned over the last 7 months, it's definitely tough. It's definitely going to hurt your returns, and the values have been hit in the near term and probably the long term, because losing a full, what's likely a full year of business, and then reduced business going forward because reduced, especially business travel, it's going to have an effect on your value. With that being said, though, I think, the better assets over the long term will fare very fine and okay. I think if you're delivering a product or, in the future, as we are, we're not, our asset will not be open until, 2022. I think, we could be delivering into a very, intriguing market where people are ready to go back and travel. All the tourism that you have to Boston, you'll have all the schools back open. People, traveling for business to Boston, and having an asset that's, best in class and well located, I think will make it kind of outperform the other assets in the market.
Yeah. Now, let's come back to a little bit about the office sector here. How is the office sector compared with hospitality and other parts of real estate?
It's how is the office market compared to the just hospitality market generally?
Yes.
Yeah, look, I mean, the problem is, looking at things near term versus long term, right? It's in the near term, I think they're both facing, severe headwinds just because there's a lot of restrictions because of COVID and a lot of fears because of COVID of people wanting to go into tight spaces in an office building and being around people. And, same goes for hotel. The difference I see is that is long-term kind of structural differences. Some may argue with office, longer term, people can, there's a question if people can just work from home, right? These companies
Sure.
are downsizing their workforce. Maybe they don't need as big of a footprint. So they may, long-term not need as much office, thus, decreasing the demand for office space. On the hotel side, you have a similar kind of long-term trend. I think the business travel side and group business for hotels is also it's going to be challenging because that is a big portion of hotel business that I think may just go away or just be reduced significantly. But, the difference is office, is kind of generally just office. Office is, kind of caters to all tenants, although there's obviously different office space for, certain people, whereas hotel, there's certain hotel that's more leisure focused, that's more, higher end for certain clientele. And then there's really hotels that are catered towards more of the group business and the business traveler. So,
Sure.
So those assets that are really catered towards the kind of conferences and the group business, I think will have a tougher time long term. But I think both will, the sectors as a whole, I think will recover. I think they will be fine, both of them over the long term. There will be, the lower end product on both sides, both the hospitality and office, I think will struggle over the long term. I think people will be flocking to best in quality
So
assets.
what about, for example, let's talk about a little bit timeline. So say we get a, working vaccine, say next year by summer or whenever it is possible, how long it is going to take for investors to come back, roaring back?
It's a good question. I mean, I think, a lot of investors may come back before that because they see an opportunity. I think there's a difference between when you're talking about investors versus, some of the, the tenants or the customers of the hotels. I think investors may come back, well before that because they'll see an opportunity to find assets in a somewhat distressed market and then capitalize on the future gains of that asset. I know, we're looking at things like that. I know a lot of other, lots of different real estate companies are looking at those opportunities. So I think investors...
That was, Matt, that was going to be my next question is that, if I'm, Cain International and sitting on, hundreds of millions of dollars and I don't know where should I invest. So what is going on in the mind of the investors today, like you?
Yeah, as I said, I think, certain companies have thesis bets. Some of them have, specific asset classes or locations that they invest in. I think Cain, we generally just try and find, the best in class, best assets, just real estate deals that can kind of stand on their own, that are just, well underwritten, solid performing underwritings that we know we can stand behind. I think, people right now are obviously being safe with their capital. I think everyone wants to make, it's a very uncertain environment. So people are just trying to, try and manage their risk going forward. So I think that's number one. That's primary, is just to see how to preserve capital. but then it's looking as as a lot of real estate investors do, looking opportunistically, trying to find those one-off deals that are really interesting, because of whether the market's created it or there's another reason that there's created an opportunity. I think that's what a lot of investors are looking for right now is those one-off kind of.
What about the pricing? How the valuation of the properties had changed, or what do you think impact the COVID will have in the near future?
Yeah, look, I think right now, as we sit today, there hasn't been massive pricing adjustments. I think people are a lot of owners that own assets are trying to weather the storm. I think they're working with their lenders to try and get forbearance and be able to get extensions on their loans. And I think a lot of lenders are being accommodating in that regard, which when that happens, you don't get as much distress. So I think right now you're not really seeing a massive price adjustments, but that can only last for so long, and no one has a crystal ball, and no one really knows how long the pandemic will continue and when we'll have a vaccine exactly. So there's a possibility that we start to see some pricing adjustments as we go forward. But values, if you talk about values versus pricing, values have come down in a lot of assets because it's rents have come down, demand has come down, and as I said, in the multifamily sector and the hospitality sector. But that doesn't necessarily mean sellers are going to transact. They may try and hold out and kind of weather the storm. So there's in my view a difference in pricing versus value adjustments.
Now, since we're talking about Boston and also other major centers in the US, there is a big hype right now about life sciences facilities, both in terms of office and lab space. And what is your take on that? That how this sector, is it just a hype or it is real demand for life sciences facilities?
Look, yeah, my view has always been, I have a personal just interest and passion for medicine, and I think it's one of those items that there's always demand for medicine, right? I mean, as humans, it's something that we always need, and there's just constantly, there's new diseases developing, and there's so many diseases that we don't have cures for or treatments for. So I think it's a huge void, and I think there's a lot of room for improvement in that space. So it was something that was happening before the pandemic, honestly, especially in Boston. I mean, in Boston, you have Cambridge already, which was a well-developed life sciences market. There was already new developments happening in the seaport, because Franklin ran out of space in Cambridge. And also nearby
in suburbs, we are having a lot of.
In Lexington, we've seen some deals come in the market in Lexington, further north in the suburbs, and it's just spreading. And even here in New York, they're creating kind of life science corridors down here, whether it's in Manhattan or across the bridge in Queens and Brooklyn. You just see them popping up, and it's such a wide field that I feel like there's just so much space for new players to come in the market that I feel like it's really a large pool of demand. I feel like there's a lot of opportunity there. So I know it's been accelerated, because of COVID. There's a renewed focus on it, but I think it's something that's been happening. I think it's going to continue to thrive, over the long term, because I think it's just an important sector for our entire economy and for our population, frankly.
So, in addition to Boston, what are the other cities and areas where Cain International has invested or is interested?
Yeah, so we tend to focus on the kind of main cities in the U.S., the bigger cities. We have several investments in Miami. We're building 2 condo buildings in Miami and an office building. We have a sports complex that we've delivered in Washington, D.C. We have a couple investments between the Beverly Hilton and Waldorf Astoria in Los Angeles. We have the Raffles obviously in Boston, and we are continuing to look in some of those major markets. San Francisco, we've spent a lot of time there. Chicago, we've spent a lot of time there. We did the construction loan for the conversion of the Crown Building in New York into an Aman Hotel and Residences. So the major markets in the U.S. we tend to focus because we think they're resilient, and we think long term that they will succeed. So
now, as we come closer towards the interview, one question I must ask you, since your operations of your company is also based in Europe, especially in England, how much is the appetite for foreign investors in the US still? I know the foreign investors have been a big player in the US,
Yeah.
but given the current dynamics, what is your take on that?
Yeah, I think, long term, I think investors, I think there was a huge influx of foreign investors over the last several years. I think especially from some of the Asian countries, because they had such low cost of capital in their own countries. They saw opportunity in the U.S. Even from China to Korea to even Israel, there was a lot of investment in markets like New York and Los Angeles. I think there's just based on what's going on in the world right now, I think there's a lot of uncertainty, across everywhere, and especially with an election coming up in a couple of weeks.
Sure.
So I think there's, the relative safe harbor feeling of U.S. investments, I don't think currently exists as it once did. And so I think, in the near term, I don't think, that's going to really be a strong focus, but I think over the long term, they will come back again, just because the opportunity that will present itself in the United States, the quality of assets that can be delivered, I think they'll see an opportunity and want to come back here.
Yeah. Matt, thank you so much for your time, and it was really lovely chatting with you. And I'm sure we'll touch base in the future.
Yes, thank you. Appreciate it.
Thank you. Sure.